Hello everyone, this is Kathy. Just give me a second to turn on my camera and say good morning. I'm also going to share with you my screen. Please let me know, for those of you that are looking at the screen right now, let me know whether it's coming through the video, my audio. I'm going to check my audience view as well. Let me know that everything looks good and you can hear me. For those of you that are on our YouTube live stream, please say hello as well. And let me know that you can see my screen and hear my voice. I'm not here seeing anyone type. Okay, thank you, Paolo, for letting me know. Thank you, Gonzalo. Thank you, Chuck. Mentor. All right, wonderful. I need the feedback, everyone, because I think everything is working, but that's not always the case. So thank you for letting me know that everything is good to get today. So hello, everyone. Welcome to Kathy's Caffeinated Monday Caffeinated Market Buzz. I'm taking a sip of my coffee before we kind of dial all into it. Let me just make sure everything is looking good. Fabulous. All right. For those of you that are joining me for the very first time, every Monday we talk about what's expected for the markets and go through the economic calendar and share my views on what to anticipate. So the first thing that you're looking at is my heat map. And let me just kind of put my computer on do not disturb. Right now, you're looking at my heat map. And at VK Traders, we look at the heat map, we talk through the heat map, and we talk about what my views are. Now, what you will see, and it's kind of interesting right now, is that you'll see my view as dollar bullish. And for the time being, I can say that I am still dollar bullish, but that conviction is starting to wane. I am getting less bullish, and I believe that the dollar could be due for a pullback either this week or next. Now, we have a whole host of US data this week. They're not what I call the tier 1 economic reports like non-farm payrolls or the inflation data that we had in recent weeks, but still, we do have a number of US economic reports that should end up helping the dollar for the most part. Like, for example, we have new home sales, and we saw last week that existing home sales was good. We also have the confidence numbers, and with stocks doing so well in the US, there's a very good chance that the confidence numbers are going to be better as well. We also have US GDP revisions, and we'll go through all of this, but we have, most US data that should be better and show ongoing improvements in the economy, except for one possible report, and that's the one that worries me. And what that is the PCE deflator, the Federal Reserve's favorite inflation measure. So taking a step back, the US dollar has had a very, very nice run over the past couple of weeks, but last week there was a lot of consolidation and hesitation and inability to push higher for the greenback for the most part. And that on a technical basis. And even though, I'm a fundamental trader first, I always include technicals into my trade. On a technical basis, it is telling us that we may be reaching an exhaustion point. And not only do we see that potential for an exhaustion point in the US dollar itself, but also in bond yields. And I have a lot of information and videos where I talk about the importance of bond yields. I do want to share that with you and just quickly. So I'm going to remove my indicators here. And you can see last week, this is 10-year US bond yield rate. Last week, bond yields on a 10-year basis did push to a fresh year-to-date high. But then on Friday, they collapsed and then they dropped lower. And then if we add on dollar yen, and I'm just going to switch this to my panel. Hold on, pin to the left. And this is a very, very important idea that I want to share with you, which is that if there's only one thing that you follow when it comes to fundamentals, it should be US bond yields, because currencies, especially the US dollar, likes to track bond yields. So dollar yen, let me just normalize this, regular. All right. So dollar yen is trading higher today, but marginally so. The orange line is dollar yen. The candlesticks are the 10-year bond yield. And you can see from this chart that the that these instruments track each other very nicely. And even if we zoom out, this relationship stands the test of time. And it is almost always that dollar yen tracks that, like basically bond yields is the leading indicator for dollar yen. So bond yields, once again, are the candlesticks, and dollar yen is the orange line. And so what this tells us is that if this pullback in 10-year bond yields is real, or at least real for next month, then dollar yen should fall. This is what this chart is telling us. I think that is going to be the case, because I think that we're nearing a peak. If we just go to the dollar yen chart, you can see that, let me get rid of this. You can see that we're also nearing a peak. But it may not happen this week. It may not happen this week for two reasons. Number one is because we still have a lot of dollar supportive data for the most part. And I started our conversation by talking about that, how last week the FOMC minutes confirms that the Fed isn't necessarily isn't necessarily eager to lower interest rates early, and that they're definitely not coming with a interest rate cut this month, and that maybe if we're lucky we'll get it in June. But this week, we will primarily get mostly positive US data, except for one report that does not come until Thursday. So front of the week, we may get mostly positive US data, and we'll go through that in a minute. But we should get mostly positive US data. And then the other reason why we may not get that pullback in dollar yen this week, or at least not in the front of the week, is because of Japanese inflation data. There are 5 things, actually there's 6 things to watch this week. Number 1 is the US PCE deflator, the Federal Reserve's favorite inflation measure. Number 2 is Japan's inflation data. Number 3 is Eurozone inflation data. Number 4 is Eurozone inflation data. And number 4 is basically the RBNZ rate decision. Number 5 is Chinese PMIs. And number 6 is the potential for US government shutdown, which I think is, we've all been down this road a million times. There is no way they're going to let the partial shutdown happen. They're going to, have a temporary funding gap bill passed, and they'll just kick the can down the road. Viral is telling me that my fundamental heat map is not updated. It's up there. I see it. If you are in the room right now and you see it, please say yes to fundamental heat map. I don't see a problem with the fundamental heat map right now. You may want to refresh your screen. Okay, so yes, those are the 6 things that we're watching. So for the US dollar, I'm bullish, mildly bullish. I think we're near a top. And I think it may actually happen more of a pullback towards the end of the week rather than the front of the week. I'm neutral bearish euros. Right now, euro is up, and it is actually the strongest performing currency this morning. Of course, it doesn't say much when it's only up 0.3%. That's like a nominal movement, but it is up a little bit today, and you can see that in this chart over here. Euro dollar is up a little bit today, not much. But this week, we have what could be a very, very weak euro dollar report. And I think that euro could correct on the back of that report. So the main focus this week, we actually have a whole bunch of Eurozone data. We have the Eurozone confidence numbers, we have German and Eurozone inflation data, German unemployment data, German retail sales data, and Eurozone PMI revisions. Now, the most important hands down is going to be the Eurozone inflation data. And there's a very, very good chance we could see a huge drop in the inflation data. We saw a huge drop in the Canadian inflation data, so the Euro inflation data could drop significantly. That report is coming out on Friday. We get the first look on Thursday of the German data. So once again, it may be the back of the week that we see a pullback in the euro, but I'm very bearish euros. I think earlier this month, we had the European governments, basically Eurozone governments, downgrade their GDP forecast to Eurozone, and this week we should get very ugly euro data, which should drag the euro lower. So front of the week, I'm neutral euros. Back of the week, because it's Thursday, Friday that we're going to get the inflation data, I'm bearish euros. I'm also bearish pounds. I mean, we had a lot of UK data this in the past 2 weeks, and most of it was weak. And the UK economy fell into recession, even though the BOE says probably going to be a mild recession. Not good news there. And so I think all of that should be bearish for the sterling and lead to more weakness in the British pound. The Australian dollar, I'm still bullish Aussies, even though Aussie is kind of underperforming today. Overall, we've had pretty good data from Australia. Australian PMIs were really good, and it seems like China's providing official and unofficial support for the stock market. Even though stocks pulled back in China a little bit today, overall, I'm bullish the Australian dollar. The Canadian dollar, I'm neutral, more neutral, bearish, because once again, this is what's going to happen in the Eurozone. Canada reported very weak inflation data. Inflation across the globe has peaked. We have not necessarily seen it in all of the reports yet, certainly not the US, but Canadian inflation data was very weak, and we're starting to see weakness in the labor market numbers as well. And oil prices are finding a top and pulling back a little bit. You can see oil prices where's oil? Over here. And that oil prices, like the dollar, pull back, and that we could see a more significant pullback in oil prices, all of which should be bearish for the Canadian dollar. So I'm neutral bearish Canadian dollars. Kiwi, I am bullish. Kiwi is pulling back today. We've got a big event for New Zealand this week, which is the Reserve Bank of New Zealand's monetary policy announcement. Now, I don't think they're going to change interest rates, but the market has a 60% chance of a interest rate hike from the RBNZ. You know, it would be foolish of them for them to raise interest rates in a rate cutting regime. But even if they do not raise interest rates, there's a very, very good chance it's going to be a hawkish hold, which means that comments are going to be hawkish. Why? Because New Zealand PMIs, manufacturing service activity, has been on fire. Inflationary data still remains hot. Employment data still remains good. And, you know, the RBNZ governor has told us the last part of the inflation battle will be the toughest. And so I think he only said that last week. So I think that that message will ring loud and clear when they meet this week. So while the market might be slightly disappointed that they did not, that they will not raise interest rates, I think ultimately they're going to be far more hawkish than the rest of the other central banks. And the maintenance of that yield in New Zealand is what I think could keep the New Zealand dollar supportive. I am neutral, the Swiss franc, neutral bullish, I would say, the Swiss franc, and neutral the Japanese yen. I'm neutral bullish the Swiss franc because I think there could be a pullback in US stocks, and I think stocks have also kind of reached their peak, but we'll see. I am neutral the Japanese yen because that inflation data from Japan should show if the CPI rate drop below 2%. You know, everyone's focusing on this 2% mark. So the Swiss should be below 2%. And you know, that's going to say that the deflation battle has not been won. And that, you know, everyone's talking about the possibility of a Bank of Japan interest rate hike in April. And if they get weak inflation, you know, that may not happen. The Japanese government is telling us it's probably not going to happen, but the market still seems to believe that it's going to happen. So either way, I think that the CPI rate is going to be bearish Japanese yen. All right. So now let's take a look at the eco calendar. We have no data released yesterday. Today, we had the building permits data from the US release. You know, these are revisions, so no surprise there at all. So, you know, not much of an impact on the markets. Canada reported manufacturing sales and wholesale sales, also not huge market movers. At 10 o'clock, we have new home sales. So I live in New York, and I can tell you that the housing market is not softening, has not really softened as a result of higher interest rates. Instead, you know, it is the lack of inventory that is keeping prices high and, you know, people still bidding up. So given that, you know, that's obviously going to impact existing home sales more than new home sales, but I think builders may have the confidence to restart their projects, especially since, you know, it doesn't seem like we had a crash in the housing market, and we could be looking forward to you know, some better times in the spring. So new home sales are expected to be up. We also have ECB President Lagarde speaking today. It's very, very important. That's one of the more significant event risks. And, you know, yesterday or this morning or sometime in the last 24 hours, we had a ECB official basically say that the earliest that they could consider an interest rate cut is in June. That is why euro is up. Here at BK Traders, we're long euros off of this zip buy signal. Now, you know, we obviously got in, I'll admit, at the New York session, and so it hasn't moved that much. But, you know, if you were in London, you're trading zip. I don't trade the London session, but you would have caught this pure zip buy signal in euro dollar. But it is motivated in part it is motivated in part by the hawkish comments that we had from the ECB last week. Thank you so much, Henrique. If you're watching on YouTube, yes, please like the live stream. That definitely helps make this more popular and more available to everyone. Tonight is the big night for the yen. I personally will not be in any yen trades before the CPI report, but afterwards we could have some good movement. This CPI number, this is where the year-over-year rate is expected to drop from 2.3% to 1.8%. And that would indicate that the deflationary battle has not been won. And that could be pretty bearish for the Japanese yen. So I think that that's going to keep the pressure on the currency. Now, it's being released at 6:30, so BK traders, we will be trading. We don't put on our Asian session trades until 8 p.m. New York time. So we'll have the benefit of the data, we'll have the benefit of seeing how the market reacts to it, and then we'll get into our zip trades afterwards. So that should be nice that it's being released beforehand. Tomorrow, we have German confidence numbers. The IFO and the ZU haven't been bad, so that number could end up being a little bit better, but the market's not expecting much. Durable goods orders from the US are expected to be weak, so that could hurt the dollar a bit, but durable goods orders is not a huge market mover for the dollar. It's only a temporary market mover. House prices should perk up. As I told you, I live in New York, and house prices are not going down. Consumer confidence numbers should also be stronger. This week, we have the consumer confidence and the University of Michigan consumer confidence numbers. And both numbers should be good because non-farm payrolls have been good. And also, the stock market has been hitting new record highs, both of which should be good for the confidence measures. And then we have Australian inflation data, and this is part of the reason why I'm bullish Aussies, because inflation is expected to be still relatively robust in Australia. And also, as one of one of the people watching, as Chuck said on YouTube, China did lower interest rates right when they came out back from their Lunar New Year holiday, which is another measure to support the property market, to support the stock market, and that is as part of the reason why Aussie may not fall as much. We have the RBNZ rate decision on Tuesday evening, and as I said earlier, market is not looking for an interest rate hike from the RBNZ, but a hawkish hold is anticipated. If we get a hawkish hold, first of all, the hold itself could lead to a little bit of pullback in the Kiwi dollar, but then the hawkish comments that come out of it in the press conference 1 hour later could end up driving the Kiwi dollar up. So we've got at 8 p.m. New York time on Tuesday, we have the rate decision. Then we have 1 hour later, the press conference. So for those of you that are trading RBNZ, it's important as a trader to be aware of the timing, because don't be fooled by the initial reaction, because the real reaction of the day won't come until after the RBNZ rate decision. Then on Wednesday, we have the Eurozone confidence numbers, which should also be a little bit better because of the stronger ZU as well as the stronger IFO reports, the slightly stronger, not really all that great. And then we have revisions to US GDP. Revisions are very difficult to predict, but if changes are made, they can be market moving. US Q4 growth was weaker than Q3 growth, and I think that message will remain the case. And then on Wednesday evening, we have some data from Australia and New Zealand business confidence, Australian retail sales numbers. Once again, that's expected to be stronger. Another reason why I am bullish Aussies this week. And then on Thursday, we have German retail sales data, which is expected to be stronger. We have Swiss GDP numbers, which will probably end up being a little weaker. And then we start to get the really important Eurozone data, which is German inflation data. So the market's expecting the German inflation data to be a little harder, but the risk is going to be a downside. The Eurozone inflation data in particular could be very, very weak. So watch the year-over-year rates, because that's the one that could really see a hit. And the market thinks, economist thinks that in April, we're going to see the inflation rate drop below 2%. So April is only 2 more reports from here. So it's going to be a very steep decline for the next few months that is anticipated. And if we get that, that could be very negative for the euro. Canada has GDP numbers. Q3 was very weak, minus 1.1%. A rebound is expected in Q4. So growth is expected to go from negative to positive, back to positive in Q4, basically skirting a recession. And that is confirmed by the stronger retail sales and trade data that we had in the fourth quarter. So this could help the Canadian dollar at the end of the week. And then the most important piece of data for the US this week is the PCE deflator, which is right here, core PCE. Market is expecting a slightly stronger release, but be careful because the risk is to the downside, because even though the overall inflation seems to be still high, if the PCE deflator pulls back, that could hurt the dollar. So I'm bullish dollars in the front of the week, but towards the end of the week, be careful of this report right here. And then Chicago PMI, a snapback's expected because we had stronger Empire State and Philly Fed. And then we have some labor market data from Japan, and then Chinese PMIs. This is one of the top 5 reports that we're watching this week. Chinese data, take it for what it is, right? We all know that the data is manipulated. China wants those numbers to look good, and so these numbers could look good. The lunar, what is actually good is that there was more spending during the Lunar New Year holidays, and so the data for February, more data for February should be stronger, and we should actually see real underlying strength in some of the Chinese data. But overall, China's economy leaves a lot to be desired. It's not performing as well as we anticipate. It's still quite weak, and so I'm not expecting any major surprises. But if I had to lean one way, it would be to the upside for Chinese data. And then on Friday, we have Swiss retail sales numbers, which could be softer, revisions to Eurozone PMIs, but the main focus will be the Euro area inflation data. And the numbers are expected to be quite weak. And so on Friday, brace for potential pullback in the Euro, because that could be something that really starts a more significant sell-off in the Euro. And from the US, we have the University of Michigan Consumer Sentiment Index. As I said earlier, Empire State and Philly Fed numbers were better. So the ISM manufacturing number should be stronger. We also have the University of Michigan Consumer Sentiment Index. And because US stocks hit record highs in the month of February and the labor market numbers were good, overall, we should see the confidence numbers improve as well. So now let's take a look at our charts on a technical basis, what we are anticipating. So taking a look first at gold. So gold, is winding in a very, there's a very clear triangle pattern forming, right? Depending upon where you draw it from, there's a very clear triangle pattern forming, and overall it's just, consolidating in a ever tightening range. And this is an imperfect triangle, obviously, but it's itching for a breakout. And so we need to get above 2050 for an upside breakout. And in the near term, we need to drop below this low here, 2015, for a move down to 2000. So I think in the front of the week, as I said, the dollar is going to retain its bid. I'm still bullish dollars in the front of the week. So I think that gold prices could move lower. Euro dollar, it's broke out a little bit on Monday today. I think that it could try to reach up to 108.77, but overall, that I'm bearish euros this week. I don't think there's going to be an extensive gain because I think those Eurozone CPI numbers are going to be softer. Dollar yen continues to be on a tear. Dollar yen, the previous highs here, year-to-date highs are basically 150.88. Looks like it wants to challenge it, maybe even test this. Keep an eye on U.S. yields. If it's up, it's going to rally. If it's down, it's going to fall. Dollar Swiss, on the other hand, is finding a lot of resistance underneath the 200 SMA, which is the green line. So that means that Swiss yen could be a nice, interesting long trade because these two are moving in opposite directions. But dollar Swiss has more pressure on it than dollar yen. Aussie dollar. Aussie dollar looks like it's rolling over on a short-term basis. And it's not doing much. It had 1, 2, 3, 4, 5, 6, 7, 8 straight days of gain. So pullback is not unusual. I am bullish Aussies, but we want to look for opportunity to buy on dips. Right now, Aussie dollar is in the sell zone. We went short Aussies overnight because it was in the sell zone. And until it gets back above the indicator line, you want to avoid those long trades. Kiwi dollar also pulling back today after 4 straight days of gains, but I am bullish RBNZ, so I think that we'll end the week, on a pretty firm note on Kiwi. Dollar CAD, on the other hand, I am bullish dollar CAD. I think that dollar CAD's I think if you look at this, we've got a bit of a trend line here, imperfect trend line, but I think it's going to find support near the trend line and start to move higher. And then sterling is basically the 5th straight days of gains. It's above all the major moving averages. It does look like it wants to rally, but I would be cautious of really jumping into this trade because UK data has been pretty weak. All right, so that's basically the fundamental and technical outlook for the coming week. As I said, we also have the potential for a U.S. government shutdown. I don't think that that's necessarily going to happen, but definitely keep an eye out for that. Also, for those of you that are watching this on the YouTube live stream, make sure you subscribe to our channel. If you don't already, I'm going to drop in the video our free Telegram link, which can keep you updated throughout the course of the week of my outlook. So make sure you join our Telegram channel. And if you want to learn more, please join BK Traders. Or if you want to learn more about fundamentals, make sure that you take a look at our trading courses, because that's something. I'll drop a link for our fundamental trading course. Definitely check that out as well. And for those of you that are prop traders, we have a prop trading webinar about all the updates in the prop sector coming up later this week. So definitely check that out as well. So I'm going to paste some of these links into this channel, and I'll add the Telegram link into the description of this video if you're watching the replay. Otherwise, what kind of questions do you have? Fire away. Let me see if there's any questions or charts you may want to look at. So yes, the heat map should have said bullish in the Swiss franc. I've got to update that picture over there. But you guys are very insightful and correct. If Swiss GDP rises, what does it mean for Swiss? Not much. It could be initially bullish, but honestly, Swiss data does not affect the Swiss franc all that much. German 40, I wish Boris was here, because he is the one that usually goes over the equity markets. But with the German 40, let's take a look. We'll just use this feed here. I mean, you can see the markets are on a tear. Lower inflation is good for German stocks. And so German 40, looks like, don't fight this trend. It looks like it wants to continue. Mike has a question. As a day trader, do you suggest we do not trade in the morning prior to economic news? Actually, my favorite time to trade is between 6:30 a.m. New York time to 8:30, right before the U.S. data. And then sometimes we'll trade it after the U.S. data. I actually stop trading usually around the New York equity market open at 9:30. Forex, on the other hand, will live trade CFDs, indices, and futures with our BK members at 9:30. So basically, the Forex, I would say, is, stop trading it at 9:30 in the morning, come back to the Asia session. For US, for equity index traders, 9:30 is the prime time. If PCE comes in higher, that's going to reinforce the dollar rally. It's going to be good for the dollar, and it's going to extend the gains for the greenback. Being in the US, Daily FX says you can't view the calendar. Well, I mean, if you click on the button, then just refresh it. It has a pop-up. Actually, I clicked on already, and just say, just click I am not a US resident, and it loads up. So you can see everything if you do that. Not that I'm telling you to lie, but it opens up the entire website once you click that button. So you can access everything from there, Fran. Any other questions? Euro Aussie. So one of my members here wants to look at Euro Aussie. So Euro Aussie here has broken out to the upside. Consolidation breakout. This is actually very significant. I have a strategy that is called the swing macro, where if we have a breakout like this, usually there's continuation for the next 24 hours. So in the near term, I do believe that we're going to test these high here at 166. It is certainly in the euro, in the zip buy zone. It's been in there for some time. So it looks pretty good. And so before we get the Eurozone CPI number, I think the risk that the opportunity could be an upside on a technical basis. On a fundamental basis, I don't think it's going to see too much in the way of gains. Joseph, I do this, yes, this Kathy's Caffeinated Market Buzz. We're going to have coffee, talk markets, happens every Monday at 8:45 New York time. I was just on vacation last week, so I did not do that then. If I want to trade S&P 500 and NASDAQ, which stock earnings reports should I pay attention to? The FANG ones, right? The top ones. Those are the most market moving. If Eurozone CPI comes in lower, what does it mean for Euro? First of all, I love all these questions. It means that you guys are really engaged, really interested, and really interested in fundamentals, which I really love, because all of you recognize the fact that it really does matter. And I think that's already one step ahead. So if we get weaker Eurozone CPI and we drop below 108, that opens up the door for a much deeper move down to 107. And that is really the level watch. 108 on the downside, 109 on the top side. Even if you remove all the indicators, these, there's nothing more important than price. And these are the price levels that I think this former breakout point here are in this former, support turned resistance. Those are the levels to watch. Probably I would say 109 and 108 to the downside. Do I know what the fundamental factors are for the NASDAQ? I mean, basically it's US data and earnings. That is what affects NASDAQ the most. And it does. It's not that they share the same fundamentals as forex. It's more that forex shares the same fundamentals as stocks, because what moves stocks moves currencies as well. And that's why if you coming from the stock market as your previous trading background, it's not a stretch to say that the same things that move stocks are the same things that move currencies. If the Euro CPI goes down, what does it mean for DAX? Weaker inflation numbers from any country, Eurozone, US, Canada, is good for those stock markets. And the reason for that is because lower inflation means that the central bank is less likely to raise interest rates. Now, of course, we're not in a interest rate hike regime, but it also means that the central bank in this case is more likely to lower interest rates, which is good for stocks as well. I use OANDA to trade. In the US, we're very restricted. And overseas, we recommend our partner 8cap, which if you open and fund an account with 8cap, you can get access to all our trade ideas, all our indicators for free. So it's a really great deal. You can click on this link if you're interested in joining and funding an 8cap account because you get a lot of BK benefits as a result. All righty. Let me know if there's some additional questions. Let me know where all of you are from. We're having a great session this morning, and I'm happy that all of you are, so engaged. I'm going to drop in my Telegram link. Let me go find it. If you just give me a second. And then I will drop that into the YouTube channel. So make sure you join our free Telegram channel, because you get, I'm updating it with my views throughout the course of the week, and there's a lot of great stuff there. Hello, SA from San Diego. You are up early. That means that you are a real trader. I'm going to be in California this summer, and I'm, kind of worried about what I'm going to do about my New York session trades that I start at 6 a.m. because it's going to be 3 a.m. How do you get earnings reports? You can get it at CNBC.com, NASDAQ. They all have, great earnings data there. So definitely hit up our YouTube channel, but definitely subscribe to our YouTube channel and our Telegram. And you know, that's primarily it. So I have a question: what else do I use when I'm trading gold? Do I follow the dollar? There's actually I have a lot of content on this, YT, that is on our YouTube channel. I would just the best way is probably go to videos and go to the most popular, and then you can see that there's some, this one, the gold one right here is got some great tips. So I will go 5 essential gold trading tips. This is some really good ideas here. Alrighty, anybody from Asia streaming through YouTube? Our you know, friends in Singapore, Indonesia, Philippines. Hi, Jong from the Philippines. Thank you for chiming in. All right, so I don't see any fresh questions. You know, take an opportunity to go through our YouTube channel. Join me next week. Definitely join the free Telegram channel, because you know, you're only hearing this once a week, but in the Telegram channel, we are posting videos and updates throughout the course of the week, my views. So please participate, and thank you for all the hearts, all the likes, and you know, this weekly live stream is brand new for me, and I love the fact that all of you love this, and it really gives me the inspiration to do this some more. So thank you so much, and I will see you all on the Telegram channel. Now, first of all, let me remind you, I will never direct message you over Telegram, over Discord, over WeChat, over WhatsApp, nothing. The Telegram channel is only a broadcast channel where I share with you my views. You cannot tweet back. You cannot comment on it. Anyone using my name to direct message you is a fake. So don't fall for the scams. I will never ask you to send me money. And if you see a scam, report it. Send it to me on Kathy@bktraders.com. I'll report it, and we'll shame them and hopefully get those people shut down. Thank you so much. I hope you all are prepared for your trading week. It should be a good one. All right, over and out.